Hey guys, it's Max Convexity. Excuse me. I'm going to re-record the show from today because there was too much wind noise. I'm sorry about that. Let's go over these Defiance funds for tomorrow. Well, first of all, these guys lost $618,000 on Friday. This is JEPY. That brings them to about even on the month, 2 cents a share, but hopefully they'll win tomorrow. They have 270 51.35s. They sold them for 18.20. 18.20 minus 51.35 is 51.1680. So that's the magic number. Like I say, it's a total of $491,000 or 35 basis points if they get it. They lost 45 basis points Friday, but then Thursday they made 36. Wednesday they made 42. Man, last Tuesday was the killer. Last Tuesday really put the hurt to the month. All right. Estimated dividends 54 cents right now at this point in time, based on the extrinsic that's been captured so far. All right. So these guys sold 166 1890s and they got 107.55. So the difference between those two numbers is the break-even number, 17,982.45. All right, max profit for these guys is 1.7 million. That'd be a 60 basis point capture, and that would take them to negative 6 cents on the month. Dividends looking like 72 cents right now, based on the extrinsic that's been captured so far. Here's IWMY. These guys trade Russell options. They sold the Russell put option that expires tomorrow, the 2090 level, for $12.15. 2090 minus 12.15 is the break even. 2077.85. All right, 2090's max profit, 2077's break even. These guys are going for a max profit of $788,000. Look how good this month has been. That would take them to 62 cents a share, earnings per share on this month. They've only lost one day. It was, it was 13 cents a share. It was a big loss, but they lost one day. But then other than that, they've had all winners. These guys have been on fire. Earnings per share has been positive all month. All right, we want to see these guys keep it up. Kind of reversion to the mean, because for months, or the past month or two, past 2 months has been bad for IWMY. So anyway, they need to revert to the mean performance-wise. Let's look here at these. Let's look at these funds real quick. All right, here's a daily chart of the NASDAQ. Let me put it on a shorter time frame. All right, so this is what QQQY trades. We closed right here the other day at about 18.020, and we wrote an option tomorrow at looks like 18.90. So anyway, and we sold it for about $110, and I can tell because I can tell how far apart the break even, which is the minimum, the bottom line, and the top line, which is the max profit. I just subtracted the number real fast, and you can tell. So whenever you're looking at these charts, just for future reference, if you see a box that looks taller, like the box the other day was taller, it looks like just visually we got more premium that day. It doesn't look like we got that much premium this day. Just by eyeballing it, it looks like that day the premium the premium was not looking real juicy. It depends on what's coming up the next day. One of these days, or is if a big economic number's coming up, or if Powell is speaking to Congress or something, these numbers will be a lot higher. All right, so check this out. you can look at this. Here's the one-day VIX. All right, let me put this on its own deal. Move to new pane below. Okay, so this is the one-day VIX down here. This is interesting to look at, but these are basically how these options are priced. These ones they sell have 1 day till expiration or 0 days till expiration, because Jay says they do it at 4:01. So I guess that's probably on the next day's books. So I guess it is technically 0 DTE. This one really doesn't help me that much to look at because it's just back and forth so much. It doesn't seem to trend that much. It seems to go from either low to high to low to high and just kind of back and forth really fast. Jay said to look at, he said to look at the 9-day NASDAQ. Or not NASDAQ, the 9-day volatility. All right, let me take this 1 day off. But anyway, the 9-day, you can see it's not quite as back and forth. You can see trends developing, but whenever volatility is real low and stays low, it leads to conditions where these guys can't pay as high of dividends whenever volatility gets compressed. That's what was happening in December to these guys. But volatility's ticked up lately. Anyway, at least IWMY is capitalizing on a good way right now. Check out this chart of Russell. This is what IWMY trades. These guys have been hot this month. You can go back, you can look every day. So here they finished above the box, that's a winner. There they finished in the box, that's a winner. Here they finished above the box, max winner. Here above the box, max winner. Here below the box, loser. Anyway, here above the box, max winner. Here above the box, max winner. Here in the box, so partial winner. Here under the box, so that's a loser. But here, max winner, partial winner. So these guys have been on fire this month. Not only catching extrinsic, they always capture extrinsic. Whenever you sell the daily option, you're going to capture some extrinsic, the way they do it. But they've also been actually catching some net profits too. Once you subtract the losses, the fund's actually been profiting a lot, which is good to see. So what they need to do this month is not pay out all of, hopefully they're going to make more than what they pay out, and this will go to fund months where they don't do as well. That's the way it's designed anyway. We'll see. Let's see here. Let's look over here at Coney. All right, I'm going to turn off this volatility. I hate when the side goes to percentages. My computer's not behaving well. Regular. All right, well, I fixed that problem. Now I want to see the other profit box. So they wrote this one way out of the money, but look, the way the trend is going, we'll probably be there in a few days. I mean, it's going up at a 45-degree angle. I'm sorry about the audio on that other video I did. I thought I could hide from the wind, but I can't. I just the Texas wind in the spring is too much. I apologize. All right, let's see what else we have to look at. Let's check out Tesla. Okay, these guys rolled down from the 205 like they wrote last week, and now they're on the 185. It looks kind of on a chart basis like they're maybe bottoming out, head and shoulders bottom, and they're going to turn around and go up here. I mean, looking at charts is kind of like looking at the clouds. It's subjective. You know, you can see stuff in the clouds that other people can't see and vice versa. But anyway, I'm hoping this is a reversal pattern, because it would be nice if, for this fund and also for people that have Tesla, if this bottomed here, went back up, and it'd be perfect for this trade that they have on if Tesla was around 187 by Friday. That's kind of what we're rooting for. That would be the ideal situation. So we shall see. I'll keep checking in. Let's check and see how Misty's doing. Misty's one of these 45-degree angle ones, yeah. Misty will probably be there, I don't know, the end of the day tomorrow. Misty will probably be this one will be in the money. I mean, who knows? This one's been on fire lately. What else do we have? Let's check out a little NVIDIA. These guys rolled way out there, but if you just look at the trend and just project like it has been, it should be there by Friday. The way it's going. All right, let's see what we got going on the buffer report. All right, I've already showed this, but the sound was bad and people may have turned it. But anyway, these guys are doing what they're designed to do. They're all outperforming the index. That's what a covered call or a short put fund has to do whenever the market's down. If you have one of these funds and they aren't outperforming when the market's down, that's not a good sign. Anyway, so these guys are all doing a great job. QYLD was the champion. FEPI did great. YMAX looks great. I mean, they all look good. They all did what they're supposed to do, and Elise shaved it. At a minimum, they shaved about half a percentage point off. It may not seem like much, but when you shave half a percentage point off on every down day, and you compound that out over a year, that makes a big difference. And that's why in a year, when, say, if there's a year the market's down 10% or something, I would expect these funds to not be down, to be these funds would outperform, and the funds would probably be even on the year or something, you know. But if in a year when the market's down, say 30%, like what happened during 2020, it bounced back. It didn't stay down, but when it was down 30% for a while, the covered call funds were down about 20-25%. They're going to get a fraction of it. That's what they're designed to do. That can save you from a margin call, and and it can save you from all kinds of bad things happening. The price you pay is on the way up, is what's happening to Coney. They don't go up as fast either. So they don't go down as fast. They don't go up as fast. Anyway, so this is just on a 1-day basis, but. Great day. MRNY had a great day, up a couple of points. Sky killing it. Misty, of course. The average fund was better than the average benchmark. That's pretty impressive. Over here in S&P land, I promised someone I would put Russell on here, and I'm sorry I forgot to do it. I will do it before the next update. We'll start having Russell ETFs on here. I promised to do that a few days ago. All right, but XYLD had an excellent day, but all of these did what they're designed to do. These funds must outperform on a down day. That's just... Market's down. This is their jam. When the market's down 65 bips, look, JEPY barely down at all. JEPY or JEPI barely down at all. JEPY, down about a fifth of what the market was. That's awesome. Good buffer there. ISPY down less than half. All of them did a great job. This is the way buffer works. All right, and we've already looked at that. All right, well, let's look at futures real quick since it's later. Let's see what's going on with stock index futures. So the NASDAQ's down 19 bips, 18 bips, something like that. S&P's down 8. Russell's down 14 basis points. Okay, so we're basically chopping, churning. It looks like what the NASDAQ did is they gapped up. What day was that? Thursday. They traded sideways after they gapped up. Then Friday, it looks like they traded below it. They traded above it. But then they finished, and then they finished below it, which is not usually a good sign for the market. That kind of looks like it has all the hallmarks of a reversal day, or it was a reversal day. We'll see if it gets follow through, or if it's like a one day pullback in the NASDAQ. Let's see what Bitcoin's doing. This thing's been on fire. There's Coinbase's stock. I mean, my gosh. All right, guys. You guys have a good evening. I'm once again sorry that last one had bad audio. Hopefully this one's a lot better. Have a good one.